Well, markets and elections, the latest series we have for you. Going into election season, how exactly are markets positioned for that? How are market veterans analyzing the situation and the various factors at play? And today I have with me Raamdeo Agrawal of Motilal Oswal Group to discuss that. Raamdeo, thank you very much for your time. We are just about a week away from the final outcome, and this has been one of the most noisiest elections in the past 30 years.
Very prolonged and very noisy.
You have actually seen various cycles of the market as well as various election seasons. This time around, in your view, how are the markets positioned going into this event?
The good thing is that this is under a lot of data flow about election also, though opinion polls are not a level which is more authentic, but betting market and other estimates, what psephologists are thinking in terms of what could be the numbers. So market is getting a lot of data, and based on that, I mean, market is at least believing, as per me, is that there is not going to be disruption. The current government is going to come with a slightly reduced majority, about 245, 250 instead of 282. But I mean, ultimately prediction is prediction. Sure. There will be mistakes. I mean, there will be. I mean, it could be even 300. It could be even a little lower than 245. So, but at least market is not saying that there will be any major disruption in the current dispensation of the things in Delhi.
Okay. So, after Balakot, there was a sense in the market that there would be a blowout again and chances of a complete, swipe by the current government. But lately, last couple of weeks, the way election voting has progressed, and again markets have also coincided with coming down from almost 12,000. Nifty has come down to 11,300. Do you think some tempering of expectations has also happened, and it is good that market is going into this event with lower or tempered expectations?
Yeah, see, 1 month is a lot of time with such a noisy kind of election, a claim and a counter claim and various other issues, even defeating this particular part of it. So there is a lot of hue and noise, noise in this thing. So the kind of feel which was there at the time of this actually attack happened a month and a half back, that impact is much more mellowed down, which is good actually. So it's a much more neutral. But I think somewhere it took away the, I mean, forget about what the BJP got, but I think a lot of opposition guys, they kind of they lost the way. So there is no alternative. I mean, now the BJP or Mr. Modi looks to be there is no alternative kind of situation. So to that extent, I think the certainty of his coming back has increased in the minds of the people. But as the time passes, that other factors start coming in and uncertainty starts building up. Somebody says that it might be 180, 190.
Yes.
So suddenly, it brings down the confidence. And then globally also a lot is happening. See, the stock market is a reflection of everything. Yes. It's not only about election. In fact, I would say the other things are playing a lot more, in the sense that how the dollar is behaving, how the US-China trade war is on, how the oil is behaving. So those things are also playing a role. But if you see the FI flow as an indicator of what foreigners are thinking about India right now, I think they have become muted, and the decline is because the aggression which they bought in March and early April, that has tapered down.
And even the way China and US situation or circumstances have completely changed in the last 1 week or so. It was absolutely not envisaged earlier. Do you think this comes as a surprise for the market, the way again they are at daggers drawn, because they almost kissed and made up a couple of weeks back?
They seem to be love and hate kind of situation, where every time they find new reason for postponing by another 1 month, 2 months kind of thing. But US has gone ahead and raised the tariff by 25%. If by chance it becomes permanent, in the sense that it gets prolonged, then I think it will have a huge repercussion on the global trade, global competitiveness of China, because a lot of things which China exports right now, the scale and the price at which they can sell is not possible by anybody else. But with 25% duty, a lot of other countries, particularly Indian entrepreneurs, they will be very fast to seize the opportunity. But once let it become permanent, I mean, is it only 1 month, 2 months? You cannot take a business decision based on that.
And there are sections of the market already talking about how India may actually turn out to be a gainer because a lot of manufacturing capacity
but it's too
from
early.
China can
Too
shift
early.
to
I'm
India.
telling you, it is too early. I mean, this nature of this beast is too unpredictable. I would not count on that too much. So that is one aspect of it which is there. Second is the how the FIs are. I mean, in March they just came out with 32,000 crores of buying, which was unprecedented. That took the market to different levels.
Yeah.
And the cooling off of the domestic investor, which is on from October, November onwards continuously. That I mean, you might have seen March flow, which is the lowest. So I think domestics are still cautious, very cautious, I would say. And foreigners are also now sitting on the fence. They are not selling. So it all depends on 23rd.
So half of the Nifty earnings is almost getting over. What are your reading of the numbers so far? Because on the one hand there is a lot of talk of slowdown, but on the other hand, so auto companies are talking about slowdown and the numbers are being
visible
cut,
clearly,
which is visible clearly. But when we talk to Asian Paints at 12% volume growth, say Kajaria for example 11-12% volume growth, and HUL with a somber commentary gives 7% volume growth. Because you analyze companies right from your private equity business, your smaller companies, all the way to asset management, the breadth of companies which you analyze. What is the reality in your view?
See, it's very confusing right now because how much is the actual slowdown in economy and how much is impacted because of the slowdown in the entire credit flow. I think there is a disruption in the credit flow, smooth credit flow in the system. There is a aversion. There is a aversion to lend, and a lot of what you call winding down of the NBFCs are happening because they want to become just safe. So this is a very confusing environment. And then on top of it, you have this election, which is so noisy. So the confidence levels in a lot of businesses, particularly for the month of April, March, April, is quite low. I mean, I was there in one of the hotels in Padi. He was saying that this month is complete washout, April and May, which is, I mean, he said till March it was booming, and he's guiding me that next will be a bumper. So so you are passing through a very low phase of businesses. So I would not like to extrapolate whatever is happening right now into too much into the future. A lot of things will change.
But at the same time, not to disregard the fact that last couple of years for the markets aggregate, people have got estimates again awfully wrong because they start the financial year strong and low, and we are again winding up our financial year to start a new one. Do you think that, what is your own number? You look at that very closely.
See, next year it is expected that earnings growth could be upwards of, for Nifty, it could be upwards of 20%. And and one of the source of earnings growth is going to be the corporate bankers like SBI and all. So there I see the confidence level, and if you see the commentary of the quarterly results of the Rajneesh and everybody, that looks that it is high probability that those numbers will come. So I think if not in the first half, in the second half of this year, we must see a very determined recovery into the corporate profits.
Okay. What about how are you analyzing the consumer space? Because that was the latest, in the firing line of the market, if I may call it. All these really, pricey stocks on the consumer space. But of course, they've been performing. They've been pricey for a reason. And now the premium which they had enjoyed for a long time was mildly being stripped off by the market. You have seen some of them for decades now. Do you think this is a mild correction which is happening and people will reposition themselves there?
It is very difficult to, in last 30 years I have seen all these consumer companies have just kept on becoming more expensive decade after decade. I mean, I remember when I started my career in 80s, 89, 90, when I wanted to buy Asian Paint at 15, 16 p multiple, it was more like 20, 21 p. I thought it is expensive. When I was agreed, I was determined to pay 25, it was at 30, and now it is 50, 60. So this thing has happened because the longevity of these franchises, and nobody has been able to actually damage the franchise quality
in a major fashion.
Yeah, that has been the major factor in people just staying on to the stocks. They are not willing to sell these stocks, and hence it is becoming expensive. But I think when you buy at significantly 3 to 4 times of the growth rate, say your growth rate is 15%, take it about 15%, 16%. If you buy it at about, say till about 30, 35, it's fine. But the moment you start crossing 60 and all, I think you are speculating actually. and a great business. I think this time in the AGM in Berkshire Hathaway, one of the things which was discussed was the Heinz Kraft
acquisition.
So he accepted that the business is fantastic because on a tangible assets about $1 billion, they make about $1 billion. The issue is the price we have paid for it.
So that's the humility of some of the great investors, that they also agree that sometimes
he was very clear that they overpaid, and that's why it is bringing all kinds of...
Let's talk about another area which the market has seen price damage, and you have held on to those stocks for long, which is iShares, Maruti of the world. When the commentary comes in or the numbers trickle in, have you seen this kind of a lean patch earlier as well, and this is part of that cycle, or some prolonged kind of
we have seen lean patches, but not with so much of money. See, so that exaggerates the situation, in the sense that if you are holding, say, very small quantity in your personal portfolio, you are not that, I mean, the thing passes. I don't bother about my personal portfolio that intensely on day-to-day basis. But when people's money are involved, then you are being reported by the analyst, by the fund manager, by sales guys. Everybody keeps bringing out why you are not performing.
Yes.
Itna lag gaya, itna niche aa gaya, itna upar aa gaya. So it brings a lot of sensitivity, but it is very unusual right now. When you say GDP growth is 7%, but your entire automotive sector is down. So this doesn't connect. Either it has to, the automotive demand has to correct very quickly back, or GDP itself might get muted.
What is your own take as a practitioner of market money management, and also a citizen for watching the economy for such a long time, the debate on the quality of data which is coming up? How do you own consumer data at the AMC business, or whenever you have to put some projection?
In any case, whatever comes from, I mean, this is broad aggregate, we don't bother about that much. We are actually, I take all the data very seriously what comes from the company, because that is real, and because they have to face it after 3 months straight, one-on-one. If Aisha or Maruti or anybody says anything, by next 30 years you are going to get next number, no? So you have to face that. So that slowdown is real, in the sense that instead of 170,000 cars, if you sell 140,000, that's real. Somebody tells me that no, my economy is booming, but you are, so I'm not going to believe. The company which has 60%, 55% market share, yes, if they're not able to sell the cars, that's the reality for me.
What do you make of Mr. Vinod Dasari shifting from Ashok Leyland to Aisha? That's
a very iconic shift, and I think he's a very big performer. I'm sure it'll be a terrific addition for Aisha.
Aisha, there's another side of the market which believes that this is the time to have positioning towards defensives. And pharma, for example, select stocks like say DVs or DRL are at lifetime highs, and other section of the market has just not moved. So how do you analyze this kind of a
See, pharma is not a particularly export pharma which is based on US exports or European exports. This is not a very generic kind of a industry, because every company has its own challenges and its own opportunities, because what kind of ANDAs or whatever you have filed, and which market you are this thing, and where you are in the cycle. So it all depends on the individual business strategy. So some companies which suffered earlier, like Divi's, they had their own problem year before, and from there they came back, and now they are doing very well. So Dr. Reddy's had their own set of problems, and now they are doing very well. So it all depends on individual companies. It is not generic like say cement. If cement is doing well, one company is doing well, almost all the companies are doing well. So it is not like that. I mean, you have to be very careful in investing in pharma, and it's slightly technical also.
Sure. Well, how about NBFCs and the talk of NBFC triggered slowdown? Some sections of the NBFC which have higher tilt towards real estate and construction going through bad times, because you are also having a housing finance arm, you have skin in the game. How are you analyzing this space?
See, one of the things I keep telling guys that you can buy bad cement company, bad steel company, but never buy a bad lender, because you are giving 100 rupees and and you get the cover for you is very small. You want to have credit cost of 1% or less than 1%, whereas one blow up, one borrower blowing up can take entire NBFC down. So I think one has to be very careful in any lender. I mean, whether you call it NBFC or even a private sector bank, public banks or whatever you might say. But any lender, you have to be extremely careful. You cannot compromise on the quality of lender.
Raamdeo, we also observed in 2018 was a specifically destructive year for mid-cap, small caps after a good 4 years. And in January again we saw mid-cap, small caps come back. But then that rally fizzled out and it was the large caps which led. What is your take on valuations of that pocket versus large caps?
See, these things keep happening. One of the things was that between 14 and 17, which is the main period in which this mid and small...
The Modi rally, as they were calling it.
No, domestic rally. See, reason could be anything, but domestic flow was unprecedented.
Yes.
You got 2.5 lakh crores in 16-17 or 17-18. 17-18. You got 2.5 lakh crores. With that, all the PMS guys, and they're buying small and mid cap, and they're buying the same companies every day. So they're pushing their own products in a way higher. And companies were, finding it difficult to catch up with the valuation.
Yeah.
They tried, they were doing well, but if you push the product price by, company price by 4-5 times in a very short while, what do you do?
Fundamental lag.
So nobody complained the rise. Now it has fallen, corrected. That is the complaint. So complaint is, see, even current levels of valuations are not bad, but it is much lower than what it was 12 months back. So the problem is what has happened between 12 months back and now. Nobody, you compare it 4 years back before the rally started, and then you'll be very happy.
You've just come back from trip of 4 cities in US and have interacted with a host of clients globally.
Yeah.
How are they looking at the way Indian economy and political leadership is panning out? One, because lately we started seeing a lot of criticism by the international press for the current leadership, and the much talked about Time magazine article is being spoken about. So that's one question. And what do they think of markets in India?
See, we go and meet all the people who are interested in India. So, we are not meeting 100, and of that we are not figuring out how many are interested. We are going to 20-25 guys, all of them who have money here, or who are likely to increase their allocation and things like that. So to that extent, there is a survivorship bias in our visits. We meet only guys who are interested in India. Second, I found a lot of interest about India. Of course, everybody is waiting for the election to get over. But I think they were, on the whole, they were positively inclined. Yeah.
Because they historically, whenever Mr. Modi does a foreign visit, kind of people have...
There is nothing to do with that. It is just that India is it is inevitable. It is too big a country. And it is rising too fast, in the sense that now we are in top 6-7 countries in terms of market cap, and in next 10 years we are definitely likely to be in top 3 or 4. So everybody is now having a India strategy. They want some India allocation, some percentage of their funds to be in India, and a lot of people are underallocated. So clearly they want to rebuild, and of course anybody wants to buy. One of the things is that this level of valuation they have not seen. They love individual stocks, but when it comes to valuation, they also give up. So I think the real challenge is broad basing of the growth, so that wherever growth reappears, the fund can be channeled.
Okay, my last question to you then, coming back, let's close with elections. Anything upwards of 220, 230, how do you think markets will react? Closer to 190, 200, how do you think markets will react?
See, it's a huge event risk.
It is, right?
Yeah, so a lot of local clients also I speak to. So they have taken money, or they are sitting on the fence. So I think what market is looking, it is not about the number, it is about the stability. Okay. Even with 225 or even 220, if you are able to provide a stable transition, without any much of noise, without any breakdown, so to say, nobody wants to come with the ruling party to make it up from 220 to 272, and there is a midnight oil being burned to figure it out. If that kind of situation doesn't come, there is a comfortable transition from one regime to next regime, I think market will be fine. I think market will welcome.
Right. And if there's a question mark on that, then probably we should be...
Yeah, I think market doesn't like uncertainty. So whatever is... See, right now there is uncertainty. We might say anything about 245, this pole, that pole. But market wants certainty and event to be out. So that event is not out. So the event will be out only on 23rd. So if market further corrects from here, I think that will be very good. Right. Market expectation will be much more muted.
But this time, do you think, how do you rate the 5 years gone by of this government, and where do you see the next focus area will be whoever comes?
I think, see, one of the things which is coming out very clearly is the job creation. And job creation is not about only, I mean, there has to be a lot of effort, and I mean, there was a lot of correction of old practices in terms of how real estate industry was taken care of, how the indirect taxes were unorganized, how the cash and check, there was a loose, about treatment of this thing, demonetization which was done. So a lot of these big changes have been made. And whenever you make big changes, it has its own cost. You cannot do big surgery without pain. So the pain we have gone through, hopefully the next phase will be for growth.
Let's see how much cost they have to.
Yeah, everybody is pro-poor, but the pro-poorness has to come from the taxes.
Yeah.
So, and taxes can be collected only when the economy grows. So yes. I think the growth in the economy, and that will bring all kinds of things like a good job creation, feel-good factor, corporate profits, and hence the stock market. So I think a lot of good things will happen provided the focus is on the growth rather than kind of beating the significant players in the economy.
Right. All right. That was quite an exhaustive chat on market and elections. Raamdeo, thank you very much for your time.
Thank you.